Hello everyone and welcome to Pivotal Change, the show that talks about leadership, entrepreneurs, business development, in ways that we can bring people in here to tell their stories, tell their tactics, their strategies, their tips, their tricks, their action plan and path to success to grow not only in business but in life as well. I'm your host, Ryan Connon, and today I'd like to take just a moment in this segment to tell you more specifically what the entire purpose of this show is. I want to go into detail to tell you what to expect for the longevity of the show, and I want to treat it like you and I are on a journey together working to grow. I want to be right there with you at your desktop or in your living room, understanding your situation, because I have been all the way across multiple fields in careers and life experiences, and by no way do I have all of the answers or solutions, but I try to use wisdom and discernment in connecting people to the right relationships, the right places, at the right time. And that's my entire purpose for you, is to have you connected and grow and hopefully reach that moment of pivotal change to where you are fully launched on your path to success. I'd like to start off my discussion tonight talking about the difference between strategy and logistics and tactics. And you may or may not know, but I have a significant law enforcement background, and part of that was over a decade on the SWAT team, where I ended that part of my career as the SWAT team leader, planning missions, training and developing people to go into some of the most volatile and dangerous situations that we have here in the United States. And understanding how that translates over to the business realm, to entrepreneurs and their spirit, was something that caught me off guard. I was not ready for the similarities between the two. Because after all, leadership is leadership. And as a leader, you are a leader in the same context as you, the person doing the best version of yourself, regardless of the setting. So whether that be a faith or spiritual setting at your church, whether that be a business setting or a family setting, a community outreach, or just some hobbies that you're in, you are you and can be developed into a better leader. So talking about strategy, I want everyone to understand as we get into topics on this show that strategy is that umbrella view. It is that long-term plan. The strategy tells you how we're going to take paths and steps to get where we're going down the road. It is how we are going to tackle this overall problem. To give you an example from the law enforcement world, we may have the strategy of saying, hey, we need to execute a search warrant on this location against that very dangerous person with this terribly violent criminal background. Well, the strategy is we're going to gather a number of people, we're going to have the right type of training, we're going to get them in the right places at the right times, at the right resources. We may have to plan at a certain time of day, night, or morning in order to make sure that they are where we want them to be when we want them to be there. We may have to move personnel or vehicles or equipment around to make sure that we have the exact moment we deploy in the exact right way so that we can use speed and surprise and catch the person off guard. Or the strategy might be to be slow and deliberate and take our time into sneaking up and capturing this person unaware. The other thing that we get into is the logistics. Logistics is something that we often confuse. Logistics is more about the support. The support is how much training led to us being able to execute this style of mission. Logistics is how much fuel is it going to take to get all the vehicles on location? What software are we going to use in our equipment? What actual tools do we have available and can we deploy? Are we going to need food and water along this mission? Logistics gets our support. Do we need to block off the roads and have bunkers and barriers and barricades so that nobody can get in or out? Logistics is about the resources, the support, and the background things that happen to make you successful and execute that strategy. Now, tactics, I saved this for last on purpose because tactics is where most people, both business and personal and in law enforcement, like to concentrate. And everyone believes they can be a tactical expert, but tactics, the actual execution of room-to-room clearing, the teammates making sure that their weapons don't cross paths with each other and create a dangerous situation, the execution of apprehension without harm, that's the stuff that really comes down to the minutia, the down in the weeds. And so how does this all apply to business? Well, you need to be focusing on all three. You need to have a strategy for your business saying, this is how we're going to operate day to day. You need to have the ability to examine and analyze the resources necessary to pull the whole thing off. And then you have to have the day-to-day workflow, the day-to-day personnel trained the right way with the right equipment at their fingertips or in their hands so they can go make the sale, deliver the product, get the raw materials brought in and turned into that manufactured good. There's a lot of things that can happen, and all three of those categories I just mentioned, strategy, logistics, and tactics, all have to point at one thing, and that is the mission. You must define your mission. Your mission is a specific tool, a specific document that tells you and your team and your organization why you are showing up and what you are trying to accomplish every single day. The mission is not something that is supposed to be a pretty wall hanger in your lobby. The mission statement is supposed to be something that has weight to it, and it coordinates everyone onto a common goal for the day, for the week, and for the year. We're here to accomplish that mission. So in the law enforcement realm, the mission may be to execute a search warrant on this dangerous person and get him off of the streets so the community can be safe. The mission may be to be a trusted advisor and consultant that goes through and leads people to business financial success, personal financial success, and reduces stress, liability, and opens up time for people. Your mission could be anything across those fields. Additionally, all three of those things focused on the mission need to support also your vision for yourself. And your vision is nothing more than what do you want to be when you grow up, right? Your business wants to have a better version of itself, and that's a 1 year, 3 year, 5 year succession plan type of vision. And you're all working to gather yourselves around that common vision and push forward. And everything I've talked about so far really boils down to one single thing, and that is leadership. And let me be very clear. In the opinion of Ryan Connon, leaders are made, not born. Leaders can be grown and taught and developed, and they can be changed and molded into the exact person that they need to be. When I made my transition from cop to accountant and now consultant, I had to learn a lot along the way, and I'm still learning daily. I've had to fail, and I use those failures to fail forward with mistakes that I'll never make again. I try to apply wisdom and discernment into the areas where I don't want to just learn from my mistakes, but I want to learn from somebody else's mistakes so that I'm not doomed to repeat them. And if we adapt that mindset as a business owner or as just a person trying to improve in life, we'll be able to make these gains, whether it be in our martial arts lessons or will it be teaching t-ball to our kids, or running multi-million-dollar companies. We can all learn, grow, and change. So I want to ask you to go on this journey with me, to track these lessons learned, to look and examine at yourself while you're sitting there eating your meal, watching the show, or you're playing it back on YouTube while you're traveling down the road, or just simply listening. I want you to understand that you can be better just like I can be better. I am not perfect, nor will I ever be. Just one person ever was. And what I want you to know is that we can all be excellent together. And in doing that, we're going to have to start to do that examination of ourselves, of our businesses, of our teams, and the people around us. One thing that can often drag us down is that we constantly feel like we have to juggle ourselves between emergency from emergency to emergency. And we can take simple, practical steps like, hey guys, identify what the urgent things that need to be done today. Let's pull out our most 3 priorities, the urgent things, and we're going to work on those urgent things for as long as we can until the emergencies get in the way. But we also need to redefine what emergencies are. In law enforcement, we have a pretty hard level of what emergency is when it's time to think about panicking. And if somebody has been shot or if there's been a violation of civil rights, that's something that's broken, and that's kind of an emergency, and we need to adapt quickly right now. But in business, we often think that it's an emergency because a client is calling upset. Well, it's not. That can be taken care of. Even if money has gone someplace, or in the accounting world, we actually had a really funny scenario happen one time where money got sent to the wrong person. And that seemed like an emergency, but all of that can be fixed. So learning how to take a tactical pause and steady ourselves and calm ourselves, that's important as well. And leaders need to do exactly that: lead, pause, and move forward. The other things that leaders really need to focus on, and I really want you to draw out of this series as we continue with all of our segments in the future, is I want you to learn about how to take care of your team. Team care is one of the most important things that you can get into. That's going to keep the morale going. Oftentimes, we may see 1 or 2 things going wrong, And our knee-jerk reaction as humans is to treat the symptom. What is this thing going on right now? But oftentimes there's something behind the scenes. So let's start treating the cause and not the symptom. And that starts with team care. We also need to be setting goals and making plans to accomplish those goals. If you have goals and no action plan, well then you're really just dreaming. It's not a true vision. A vision has a plan that goes along with it. And lastly, I want to emphasize that your listening ears and your watching eyes should be paying very close attention to accountability as we go through all of the various speakers and the longevity of the show. People that have had success have taken care of their teams, written things down, made action plans, been diligent to stick with them, and taken accountability all along the way. You're going to meet people from every walk of life. And what you'll notice is a lot of these common things. So please stay tuned with Pivotal Change. We're going to do our very best to keep you growing, becoming stronger, and making yourself a better person. My name is Ryan Connon, and I ultimately come from CS Business Consulting, Shelton Associate CPA, a background in law enforcement, a coach, but the most important thing is I'm a husband, father, Christian, and I want to lead you along a journey that is going to get you to be your most important thing and affect your life the best way. So please stay tuned to our following segments, and in the meantime, I want you to see the change and be the change. Welcome back from the break to Pivotal Change. We are getting ready to come on and talk with somebody that you have seen before and that we all love. He's going to get down in the weeds with us just a little bit more, and today we're actually talking tax. We're going to go into and discuss things about what entrepreneurs maybe don't even know that could be a pitfall for their business. We're going to talk about things that could be ways they could elevate themselves and they just don't know are available to them. So I have brought back with us Wayne Shelton of Shelton and Associates CPA. He is the founder and owner of that company, and he has been helping business owners transform their businesses and really get rid of a lot of stress and gain a lot of excitement and freedom. So Wayne, welcome back to the show.
Thank you, sir.
So I want to talk about that first category. So we're going to get in here and you go through a process of analyzing businesses. We've gone through and we've understood how you implement a team model to help change people and become a part of the business owner's team. But my specific question is, when you have this first sit-down meeting with an entrepreneur, somebody that's either brand new or realized how much they are struggling in their business, what are some of the key things that you point out to them? Hey, you need to be aware of this.
You know, one of the first places we start, I have to review the last year tax returns, the last couple of years, and one of the big things we find is a problem almost all the time is entity selection. They are not in the type of entity that will help them to be as tax efficient as they should be or want to be. So that's something we look at first. They don't know that there's a difference between a partnership, an S corporation, a C corporation, or a Schedule C on their tax return. And one of the things that always amazes me is how many tax returns we see where somebody is making $150,000 to $150,000 on a Schedule C and are paying a lot of self-employment tax that they really don't have to pay. So that's where we look first. Then we have a kind of a checklist we go down through to look at other things. One of the other things that I look at pretty early on is fringe benefits, because basically our fringe benefits are virtually the same as a large corporation, or at least the availability of those is. And what we see is that most people are not taking advantage of very many of those type fringe benefits. For one thing, they don't know which fringe benefits even apply to them, so they don't even know where to start. So our job is to basically sit down and go over with them what their options are, and this is part of making them tax efficient. Nobody is 100% tax efficient, but our clients are getting there.
Oh, so I like this. So you kind of gave me three things to chew on here. So the number one is that there is an analysis. So we use a metaphor when we do this about driving a vehicle, and that vehicle is your business, and it may have a bunch of working components or some components that you don't even know are breaking down. So you get the last couple of years financial statements and tax returns, and you pop the hood, so to speak, and examine the engine of that business. So I love that. And then you see what components are running well and what components probably need some fixing. And something that I want to maybe dial in just a little bit more, you mentioned the entity type. So the entity is how you are taxed by the government, what the selection is there. And you mentioned the whole list that's available to people. So my question for you is, what's the difference between just an LLC or an Inc. versus an entity selection?
Okay. The Inc. and the LLC, those are actual state designations. Your state lets you choose whether you want to be an LLC or an S corporation. Now, there are defaults that the IRS goes to for those companies when they're set up, but you have several options. And on an LLC, for example, you can be a Schedule C, an S Corp, a C Corp, partnership. Basically, you've got those four options. There is a significant difference between them. There's difference in basis calculations in those type entities. There's also a significant difference in the amount of self-employment tax you'll pay. Self-employment is 15.3%, so that gets pretty pricey.
Yeah, that sounds pretty pricey, especially you threw out some numbers earlier. You said we run across people all the time that are making 150, 250, and sometimes more, and they're a Schedule C. So if what I'm hearing you say is that if I don't realize that I was supposed to make an entity selection somewhere along the road, I'm by default a Schedule C, and I'm paying an extra 15.3% tax potentially from what I even need to be. So if I'm making $100,000, I'm throwing $15,000 out the window. And if I'm making multiples of that, that gets really expensive really fast. So most entrepreneurs, you would probably agree, do you think they could do more with their money than just spending it on tax to the government?
Absolutely. They need to be investing it in themselves and their businesses. And that's what most people want to do. They just don't know how to do it. Now, we want to make sure that we do have reasonable compensation within an S corporation, but we have a tax program, not a tax program, we have a computer program that helps us calculate that. So we've got a lot of options there. We look at Inc. does not have as many options as an LLC, but we see most of the new things set up these days as LLCs.
Gotcha. So LLCs, limited liability company, that's more of a liability protection, more of a legal status as operating as a business, whereas entity selection is just what the states and the federal government care about how you're going to pay your taxes. And I think that's a great clarification you've made for the average business owner, so I appreciate that. Now, some of the other things that go into examination, you mentioned fringe benefits. So if you could just rattle off, what are just maybe a list of fringe benefits people don't even know are there? Maybe they're using it, but not to its fullest extent or correctly, possibly.
Sure. And there's several. Usually, their cell phones, they know that they can pay those through the business if it's a business cell phone. A lot of times people don't realize that they can probably put in a home office because almost everybody that has a business, they work from home some, they do research. They can also look at their home internet and probably can deduct that. Health insurance is a huge expense these days. And one of the things we see is that people don't realize that they can pay for their health insurance out of their LLC or corporation. So we help them structure that appropriately. Depending on how many other employees they have, what they offer to their employees, what they offer to themselves, will be dependent on that. But, home office, fringe benefits, such as even there's life insurance you can have up to $50,000. There's disability that you can have for your employees. And what we try to do is use as many fringe benefits because those are tax-free. And anytime we can give an employee a tax-free benefit, that helps them significantly, helps us as well.
Gotcha. So I heard you say something really important about helping somebody do this the right way, right? You're going to help calculate these for them and help them move through that. So what I'm hearing is that there's a whole host. You could throw a net out there and catch a lot of fringe benefits, but just to not give tax advice live on air, we're not telling everybody just to go start paying health insurance and paying life insurance. There needs to be an examination that's done. And then like a home office, well, there are rules that have to be in place in order to do that. Yes. If you don't have somebody like you, who is an advisor, knows the rules and can build things like an accountable plan, which we're not even going to talk about today, to make sure that this is executed in the proper and ordinary way for your business, they could get themselves in trouble by just saying, I'm going to pay my cell phone bill, I'm going to pay for a home office. But on the same token, done right, they can save a whole lot of money in tax. Let me ask you one more here as we pivot just a little bit more. People have a lot of things going on in their lives. They may have family members and children working for the business, or they may have vehicles and other pieces of equipment that they have historically personally owned that are being used in the business. Are there any opportunities for the business owner in those areas?
Absolutely, there are. Let's talk about children first. If you have a child 17 and under, you can pay them through the company for real work. And we have a list of things that qualify for real work and what qualifies as a reasonable compensation for that. But if you do that, the only taxes that you have to pay are Social Security, Medicare, and any local taxes. Federal tax and state tax are not, they're not subject to that. So if you have somebody that's a high earner, say they're making $200,000 or $300,000 in their LLC or their S corporation, they can pay 14, I think it's 14.4. They keep raising it every year. But I think for 2024, it's 14.4. They can pay their child, and that takes it out of their taxable income, and the child will have no tax on it. It's a
Wow.
big deal.
That is a big deal, especially if they have multiple children, 2, 3, 4 kids, as many people do these days. You're talking about tens of thousands of dollars coming off of your taxable scenario and into a bucket that has no tax other than Social Security, Medicare. That's a big deal. So kind of let's cover maybe one more topic before we get close to wrapping up here today. But tell me about kind of the equipment and the vehicles and things like that. How does that play into an entrepreneur's journey of discovering what tax advantages they can use?
Well, we met with a client yesterday that had that very same thing. He had started his business last year. He did mechanic type work. He had vehicles. He had probably $20,000 worth of equipment he had bought over the years that had not ever been written off for taxes that he is using for his business. So basically what we do is we put that stuff in the business and say, okay, here's the fair market value of that asset. You don't go back to the original cost because you're further down the road, but you go to the fair market value, you put those on the depreciation schedule, and you go ahead and get a deduction for them.
Wow. So there's probably a lot of rules involved with that. You can't just take all these pieces of equipment and stuff that you own. We have to understand what is a capitalized asset versus an expense. And then again, all of this seems to come with a decent amount of coaching. Now, your goal is not to make all of your clients miniature accountants, is it?
No, it is not.
Okay,
And we don't tell them every single rule. We tell them the rules that they need to know to be able to be successful in this. We know that there are a lot of things in the background, and we'll help navigate around those things.
Gotcha. So it sounds like most people truly, if they're trying to successfully run their business and they want to do what you said is save money and invest it back in themselves, they need somebody that is a trusted advisor like you, that knows the ins and the outs of the laws and can apply it to their situation specifically within the rules and to its maximum benefit. So Wayne, if people out there watching and listening wanted to find a trusted advisor like you or you, how do they find you? How do they get a hold of you and start their journey towards investing in themselves? Where do we get a hold of you at?
Shelton and Associates, Paducah, Kentucky. We have a website. We're in the book. There's our website information, so you can contact us. We'd love to talk to people. And for our analysis and the initial talking to people, we don't even charge for that. We only charge people if they decide to sign up with us. If they do not, we're happy to have the discussion with them and tell them some of the things that they need to be done.
Gotcha. And Wayne, what's the phone number there?
270-442-6688.
Outstanding. Thank you so much for coming on. And everyone else, you guys stay tuned. And thank you for Wayne Shelton. We'll be right back after this break. Welcome back, everyone, to Pivotal Change. I'm Ryan Connon, and I want to introduce to you our very next guest. It's a very exciting conversation because it is a current hot topic for business owners all across the country. And this is Jared Morgan with the Paducah Insurance Agency, and he is an expert with insurance, and he consults people all over the country. He does everything from faith-based organizations to small and large businesses, and he is personal and commercial lines as well. And he is going to talk to us today about what is going on with the industry and what changes are being made and how we can adapt. So Jared, thank you for coming on with me today.
Thanks much. Really appreciate it. So most people have likely noticed that their insurance rates have gone up. They're paying more either for their homeowners, their auto, their business insurance. There's very few lines that are not actually being hit with inflationary increases right now, unfortunately. So why is that? Well, in the industry, we got some pressures hitting the business that have kind of come across. I wouldn't want to call it a perfect storm, but it is in some ways a perfect storm. So you've had 5 of the 6 worst weather catastrophic loss years have been in the last 5 years, progressively worse. When you couple that property damage with inflation and construction costs, since 2020, you've seen construction costs increase by 200% or more. Now they've stabilized. They've a little bit have come down a little bit. They may be going back up again, but at the end of the day, you've got claims to rebuild a building after it's been destroyed by a wind or lightning or tornadoes have gone up tremendously. So you've got the increase in construction costs hitting it with substantial weather damage. On top of that, most people have probably noticed attorneys' billboards saying if you've had a really bad accident, we can help you out and get you a bunch of money. So auto claims have gone from $5,000 or $10,000 on average on a typical claim up to $30,000 to $40,000, and they've got nuclear verdicts which have hit. There was a $110 million auto liability loss on a oil well contractor in Texas that it set the record for the largest liability loss from an auto claim. And the situation for a lot of these is really bad. The people involved are hurt, but what in the past has been, 7 figures may be going to 8 figures, or 6 figures are going to 7 figures. So all that pressure has created an environment where insurance companies have lost money, some substantially. We've had some companies go out of business. We've had a lot of companies get downgraded by the rating agencies, and that's led to an environment where everybody's taking rate. I would say we're seeing somewhere around an average of 15% to 20% across the board on all insurance. Probably we'll see that for 2 years at least.
Wow. So when you say perfect storm, you do not mean that with pun intended. You mean that the behind the scenes, the forefront, the claims, the third parties that do all these things. So it is literally a global effect as far as the industry. All corners of the industry are tugging at those rates, and the insurance companies, they're basically losing their ability to maintain profitability. The rates increase for customers in order to buffer that and allow them to try to keep their heads above water in, like you said, the last 5 years, which have just been terrible. So pivoting from that, we want to make people more successful in their environment. So how do we, from an expert insurance agent, how do we buffer for that as businesses? Because we are in turn going to have to reflect that back on our clients as well. And we could run off a lot of people or make times really tough for our own customers that we care for just from a couple of our own expense lines really jumping.
Absolutely. So with the increase in cost, you've also seen an increase in deductibles for a lot of the reinsurers. When you think about a property insurance, the deductible is the amount you pay before the insurance company starts paying. And insurance companies buy reinsurance, and the reinsurers have the same situation. It's not a deductible; it's called a retention. But the insurance companies have a retention before the reinsurers reimburse them for catastrophic losses. So I tell you that, Ryan, because the reinsurers have pushed those retentions substantially higher every year for the last 4 to 5 years. And what that's done for the insurance companies is they have really focused on deductibles for their customers on property insurance. When you think about the impact of inflation, a $500 or $1,000 deductible was common, even really going back to 2000, 2005. When you look at what $500 or $1,000 is in today's money compared to the money in 2005 or 2000, a lot of people still maintain these lower deductibles when, if you adjusted those for inflation, they'd be substantially higher. So right out of the gate, first thing I would say is there's never been a better time to increase your deductible and to take care of small things on your own without turning them into the insurance company, especially for a healthy business that's got strong cash flow, that's maintaining their buildings or their vehicles anyway. Raise those deductibles on your buildings, get them up 10,000, 15, 20, 25,000 if you can afford it. That gets you to the point where you may be taking care of a roof out of pocket on a larger building, or if you're a real estate investor and you've got rental property, but you want to look to insurance to be that catastrophic loss. That tornado wiped you out. Your income generating assets now been lost. It's going to take you a year to 18 months to rebuild it, and you're going to lose income during that time period. That's where you want insurance to step in, not in a small leak on a roof that's 10 years old or older that may need to be taken care of anyway soon. So we really encourage people to start thinking about insurance in a different way. It's not going to maintain you and take care of small stuff, but it's going to have to be there for the big losses.
Okay, so I'm really hearing you emphasize the mindset shift here is that don't nickel and dime the insurance companies, which is something people used to do with those lower deductibles, and don't sweat the small stuff in doing that. So that's going to be a little bit, not just the mindset is, hey, you may have to change your budget. You may have to tweak how you are looking to get your expenses in order because you're not now going to have to absorb these smaller costs to preserve those bigger inflated, larger costs later on.
Yeah. And something else, a lot of times, really, there are insurance agents who've made their career, me being one of them. The last time we saw a rising rate environment like this really goes all the way back to the late 70s. After the September 11th attack, the insurance industry went through about a 8 to 12 month period of rising rates due to the surprise coverage of terrorism, which most insurance companies didn't realize they were going to cover because war is excluded on insurance policies. So you had a brief rising rate environment, and since 2002, we've had a what we call a soft market, which is really falling rates or steady rates. And you could generally find a company to give you a better deal than what you had if you went out and worked hard enough to try to get quotes. Today's world is different. So in the past, where we've seen customers, and we've had a few of these ourselves, where hey, we'll go find something somewhere else cheaper. We don't like that rate increase. Come to find out, they couldn't, and if they don't do a good job to try to pay the renewal or take care of things and keep what they've got, if there's any negative attributes or negative qualities of their risk, the insurance company even that had them might not want them back. So we've seen situations where I would say if you're looking to get proposals, talk to your agent first and ask him to do it for you to get alternatives. And I would be a lot more hesitant to go out and try to find new, even though you may be frustrated with the cost differences. If you do go to market, start 90 days before your renewal. Give everybody plenty of time. Make sure you're getting loss runs from your carrier so that you can show who's quoting you, what your record's been, and if it's good, especially. And anybody that's in a boat where they've had some challenging classes, whereas in a normal environment, companies would take a risk and say, "Hey, you've had no losses. We'll like this." But if you've got, for example, I've got a customer that makes a product for the marine industry, and it's a fairly benign product, shouldn't have any products liability exposure that's crazy, but because it's connected to the marine industry right now, nobody wants to touch it. They've gotten non-renewed, and they're going to the excess and surplus lines market, which means even though they've had good loss experience, they're probably paying 3 to 4 times what they should be, just because what they do is outside the box a little bit. So you really need to give a lot of time to your agent. Find an agent that knows how to market it, that can really help you out and place you at the proper place, and expect to pay more. That's the last piece of it. Is even if you're the best risk ever, this environment, you're going to pay more next year than you did last year, unfortunately.
Gotcha. So even though insurance is not necessarily directly connected to the economy going up or going down in inflation, it has that other perfect storm items in it. What I want to pinpoint, something that you really said and you hammered this, is that go to your agent. We truly, truly want to push professional relationships and relying on the professionals in each of their industries, allowing them to operate in that wheelhouse, and you not trying to figure out everything on your own as a business owner. You need to go ahead and pay what it takes to pay a professional, because that will definitely save you in the long run. And then in treating that relationship properly, Jared, you said give them plenty of time, 90 days out before your renewal. Now, I know in dealing with you that you give me plenty of notice, usually 60 to 90 days of hey, the renewal's ready. And then if anything in the market has changed, you're proactive with me to say, hey, something's going up, your rates are going to change, get ready. And I've had to mentally and, of course, financially prepare for those rates to go up. So I know rates are going up because of probably outside of the economy reasons based on the perfect storm that we talked about at the beginning of this segment. But for me, I have to now earmark those things and understand times have changed. And this is the new price of doing business in the insurance realm. And then following up that last point that you made, I need to treat insurance differently and don't sweat the small stuff. So next question for you. Let's say I have a business owner that is in one of those tough spots. They're getting a notice of non-renewal, or maybe they've had several claims. They've just straight up been dropped. Like there's some bad situations here. How can they then get their head back above water? They don't want to go to some cookie cutter online website to get insurance for their large cash flowing company. What tips do you have for somebody that's struggling, that's already backed into the corner?
That's a great comment. And I'll kind of speak a little bit to that because there's no question a lot of entrepreneurs will start out with a shoestring budget and they'll say, we're going to do this as inexpensively as we can. And as they build their business, they start generating and creating this asset that generates cash flow for them. They hit a certain point where what I might have done on a shoestring budget is no longer when I didn't have any assets is no longer where you're at, right? And so in that position, now it goes from, hey, I went to Hiscox online and bought an online policy, and from the insurance industry standpoint, you're a transactional customer when you're doing that. You are only looking for the cheapest price possible. And then after that, as you build that cash flow, now you don't have time to do things yourself that you did early on in the life cycle of your business. At that point, you need to find that professional relationship and be willing to spend time on it to say, hey, I need somebody that I can call if we have a terrible incident, either a bad auto accident, somebody gets killed, either a personal worker injury, a lightning strike, a fire, a tornado. I want to be able to call somebody who's actually got my back and can take care of me. And I'll say, so the two parts of your question is that professional relationship, there are agents out there that focus on getting the cheapest insurance, and they tend to treat their customers transactionally, right? So they're going to try to get it as inexpensively as possible. They might cut coverage down. What you want is a professional relationship with an insurance agent who will ask you what you want to have happen in a certain type of loss and help you get that outcome for you. And part of that is choosing what to spend as a business owner. If you live in an earthquake zone and you want to insure for earthquake, then you're going to spend more money to do so. And your agent should enable you to get the outcome you want after a certain type of claim and guide that conversation. So if you get non-renewed, or if you've had a bad streak of luck, or if you haven't controlled your own risk well, because as you're scaling up, you don't realize that certain safety measures need to be put in place. You need to find somebody that's got the expertise that can place you in what we call the excess and surplus lines market, or the E&S market. That's a non-standard place. And the goal for you is to go to the non-standard market. You're going to pay a lot more money for less coverage, but stay there for a short period of time and have a plan to get back into the standard market after you've rehabbed your account and not having lots of claims, and are now in a position to where you can make a case to an insurance company that you can be a profitable customer of theirs.
Great advice. So, Jared, let me jump in here. So that was really hitting kind of the nail on the head for a lot of our people. So let me end with this portion of it here, because we are coming to the end of this segment. Learn how to rehab like that. Let's say the people viewing want to find an expert, and they say, hey, I like the expert on the screen. Tell us, how do we get a hold of somebody, specifically you? How do we get a hold of you and your agency so that we could talk to an expert like you? Tell us how to get a hold of your website, phone number, email, whatever is the best way to get a hold of Paducah Insurance Agency services you provide.
Appreciate it. Yeah. So we handle a regional area for churches. Our agency handles Paducah, Kentucky. Out of Paducah, Kentucky, we handle Kentucky, Tennessee, and Alabama. And then for general insurance and personal lines, home and auto, we handle Kentucky, Illinois, Indiana, Ohio, and Tennessee. So we're a regional agency. We can't handle folks too far out of that footprint. PaducahInsurance.com, PADUCAH. PaducahInsurance.com is the best place to go. And all of our contact info is on there. You can call us. You can submit a lead form and request for contact, or whatever you want to do on that front. In our footprint, we're happy to help. And I would tell you, we've got fantastic markets and can offer the best value from anybody out there.
Welcome back, everyone, to our final segment of the show. And I have brought with me a very special guest and dear friend of mine, Lera Kooper of Accountability Services. And we are going to jump into a nice leadership and business style of operations conversation for you. So, Lera, thank you for coming on the show.
Absolutely. I'm happy to be here.
Good deal. So I want to open up with a pretty fun starter question for you. I want to know, basically, you have these approaches to business, and I believe there's 3 general approaches to business that you like to emphasize with people. So I want you to dive right in there, identify those for us, and tell us about them.
Yes, no, this is the good stuff. So in general, I like to think of 3 approaches to business, or to life, if you want to extend it there. But I think of it as reactive, proactive, and strategic. And just to give you some brief definitions on each of those, I think of reactive as what happened. If you're thinking about a tax return, this is a historian, essentially. It shows a report of what happened. And maybe if you're lucky, from your business advisor or whoever, you'll even get an answer as to why did it happen. It's a little bit diagnostic. But then when we look at proactive, we start looking forward. It's what's ahead based on what we know in the past, what's likely to happen. And then strategic is what do I want to happen and how do I make it happen? So proactive is just knowing what's coming, avoiding surprises. And then strategic is where you start to craft the story of the numbers and what you're going to do.
I love it. So to me, this goes right along with some of the old training we used to do, action versus reaction in law enforcement. Action always beats reaction. It's that way in business, just like it is with human reflexes and everything. So being a proactive business owner and taking yourself out of the reactive shoes, how do you go about making those changes?
It sounds harder than it is. It really just requires a little bit of time. And I would say that to even have a diagnostic conversation of why did something happen, you have to have good, reliable data and consistently. And this means your accounting records. Do you have all of the data in one place? Are you looking at it regularly? And that just gets your feet wet in identifying what levers there are to pull that'll move your business forward. And then once you have confidence and clarity in those numbers, you can start extrapolating that out with forecasts and projections to what's likely to happen and what if scenarios for if you dive down any of those directions.
I like that. So instead of just making an attempt to rely on human memory, the memory of your partners, your staff, you want actual systems in place to document, to categorize, to be able to give you the diagnostic approach so that you can develop those things. And then with that proactive step, you can then take the same data and the same mindset and become strategic, correct?
Exactly. And I always say you should know the data rather than feeling the data. In the accounting and tax world, we know busy season is, these first couple of months of the year, and then advising season is in the fall on the traditional model. But if we know the data, we can start to take measures to even out that workflow throughout the year through how we engage with clients, how we, what our expectations are with our staff. And so that really is the first step, is just knowing what is real.
I really like the way you worded that. I think that's something that people are going to probably really let set in as they try to finish hearing what you have to say and all your expertise and really jumping to move forward with this proactive. So I want to transition a little bit. We're really obsessed with value nowadays, right? That's what we're pushing our clients to do. We're trying to draw out value, get people just more out of just the purely transactional compliance area. But across all businesses, value pretty much reigns supreme. So what is the value in the strategic approach specifically?
Oh my goodness. Well, I would say it is far too consuming to be a business owner not to get some sort of payoff or value out of that investment of your life and your time. And so that high quality data of yours should serve a much greater purpose than just filing a tax return. If you are starting a business just because you want to file a tax return, you're probably the minority. But if you are starting your conversations with your CPAs just during tax season, you're doing it wrong. The tax return should just be the box that you have to check. It's a compliance item. Good data allows you to take your goals and align it with your execution strategy throughout the year. And that's what I mean when I say craft the numbers, that what do I want to happen? What do we want to do next? And how do we make it happen? It's not just seeing what happened, it's what's next.
Can you say that again for me? Good data does what?
Oh gosh, I think we're gonna have to replay
Oh, well, that's okay. So it's
the
good data.
role.
It gives you the ability to analyze and align it with your goals.
Yes. So
That was beautiful. You're very articulate. I'm going to probably steal a lot of what you say and bring it up in future conversations.
yeah, I can't say it twice in a row though, apparently.
No, that's no problem at all. I do that to myself all the time. The very fun thing is that we want to bring people into strategy. You know, there's logistics conversations. What type of resources do I need to support myself? There's the tactics of the workflow and how do I actually get the job done. And of course, the strategy driven by data that you don't have to feel and suffer through, but you know and can utilize as a tool. I love that. So my question is, if I am basically this giant mess and I am feeling all of the stress of my industry or my business, how do I begin? Like, where do I start to become a person in the category that you're trying to develop?
Yeah, that is an excellent question. We keep saying that you need good data to make well-informed decisions and to align that strategy with your goals. And so you have to start with good data. If you don't have an accounting system in place, get one. QuickBooks Online is a very popular product. Make sure that either you have the education or you hire someone that does to make sure that your business activity is being properly reported. Because unless we can see a clear picture of that story of the numbers, you know, we want to make sure the chapters are in order. Imagine reading a book where they're all out of order. It doesn't make sense. You need a clear picture to even understand what tax efficiency looks like. And that's the bare minimum as a business owner. That's one of those first few questions that you ask. How do I be tax efficient? And we as advisors can't give you a good answer if we don't have good data to look at. And so that's number one, get it into an accounting software and then get support to ensure that the numbers that are in there are clear and reliable.
Gotcha. And we, of course, want those to be clear and reliable because they're categorized appropriately. And you would be talking about a software that can handle things as far as inventory, as far as tax payments from payroll, of course, all of the bookkeeping categories. Do you have a primary area where somebody comes to you and says, hey, I'm a mess, Lera, please help me? What would you say are the top 2 or 3 areas where people are suffering and feeling that pain point? Again, not industry specific, but they say, I know I'm what we call hemorrhaging money to the government. I'm not tax efficient. They don't use those words. We have to teach it to them. What are the top couple of low-hanging fruit areas where people are hurting really bad for their inability to have clear data?
Yeah, well, I think one thing that people often do is they miscategorize balance sheet items or fixed assets and put them on their profit and loss statement. Or commonly a misconception is my profit and loss statement says that I made money. Where's the cash in the bank? Obviously, some opportunities for tax efficiencies are R&D credits and retirement, income shifting. You know, if you have family members that live or work with you, excuse me, but there's a lot of options out there, but what applies to you is unique to you. And that's why you need good data and someone that knows what they're doing to help you pair the strategy with the opportunity.
So I love it. So I'm going to summarize that into, I think what you said the biggest pain point is they don't have an expert in their corner. They don't have an advisor that can basically walk them through this and explain it out, that's highly educated, highly efficient, and understands what they need, because a lot of people don't know where they're lacking. So let me pose this last question to you, Lera. So if we wanted to find somebody just like you, in fact, if we wanted to find you, how would we, the audience, go out and find you, get a hold of you? Where can you be located so that we can reach out to you and get the help that we need?
Also a great question. You can go to accountabilityservices.com. In the top right-hand corner, there's a button to schedule a discovery meeting. That'll be with me. You can find me on LinkedIn. It's Lera Kooper. And I would be so happy to talk to you about how we can get you closer to your goals.
Oh, I love it. Thank you very much for coming on tonight. We're drawing to the close of the segment, but for the audience out there, thank you for sticking with us. We had a lot of great topics and conversations, incredible guests like Lera on tonight. And I just want to thank you for tuning in. And I want you to understand that all of these things are utilized for you to make the changes that you need. We want you to find that change, whether it be in accounting or insurance or just plain old advice on leadership. Make yourself available on your calendar to get that change. So stick with us in Pivotal Change as we walk you through these things in the future, and you can go ahead and be with us. So what I want you to do before we log out for the night is I want you to understand that you can see the change and be the change. And until next time, go out there and make yourself better.
This has been a Now Media Networks feature presentation. All rights reserved.